My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Friends, I'm just trying to make you a little money. My job, to explain to you what happens, to educate, to teach. Call 1-800-743-CBC. Tweet me, at Jim Cramer. If you know how to bowl, you made a killing today because we had some of the best pin action off earnings that I've seen in ages. It was pure joy as we watched one lead pin after another slash and slam the sticks behind it. Kaboom! Strike after strike after strike. Throw in total radio silence from the White House on anything business related, and you end up with a nice, powerful rally. Dow gaining 487 points. S&P climbing 2.03%. NASDAQ pole vaulting 2.74%. Now, there's a lot that goes into a meaningful multi-day rally like this one. For example, you need a certain level of despair as a launching pad. On Monday, if you recall, the White House had hit a new low as the president attacked the one person who's universally respected on Wall Street, Jerome Powell, the chairman of the Federal Reserve. Keep in mind, Powell was originally appointed by Trump in his first term. In his time on the job, he's done many things right, almost single-handedly saving the economy from the pandemic with a strong assist from former Trump Treasury Secretary Steve Mnuchin. Sure, Powell's gotten some things wrong. We all do. Arguably, he waited too long to raise interest rates as COVID waned, spurring inflation. But overall, his record is about as good as it gets. More important, though, Powell's a symbol of effective, independent leadership. We don't have many examples of that these days, do we? In a world where every branch of government seems tarnished, where we have less respect for politicians than ever, there was this one man who actually had the respect of almost everyone, Fed Chief Jay Powell. He truly is beyond reproach, an imperturbable, implacable man who diligently comes to work every day and tries to get it right. He cares more about the working person in this country than any Fed chief I've ever seen. And the president chose to mock him, while very publicly debating whether to fire the guy, even though that's technically illegal. The president can only fire the Fed chief for cause, but there was absolutely no cause whatsoever. Powell's as upright as Mr. Smith, the one who went to Washington. He'd be right at home in a Frank Capra movie. That was, in short, a trashing too far. As Wall Street sees it, if Trump really fired Powell, that would put us on a course to become a true banana republic. And I don't mean the one that's 2 steps above Old Navy in the Gap pecking order. Nobody in this industry trusts elected politicians to control interest rates. If the president can just fire the Fed chief, rates will always be kept low. We'll develop a serious long-term inflation problem. That's why when Trump went after Powell, even the wolves of Wall Street were terrified. So when the president did the unthinkable, at least for him, and he backed off, saying he had no plans to fire Powell, he gave us the fuel we needed for a spectacular rally.
It's a pleasure.
All aboard!
It was easy.
The market had something else going for it that was a little less dignified. A series of charts that seemed to mock any possibility of a positive push higher. Everything was breaking down except for a handful of recession stocks, and the worst were the bedraggled, tortured, spindled, and defenestrated Magnificent Seven. In this version of the movie, Brooklyn's own Eli Wallach, a.k.a. Calvera, actually wins. Or in Sergio Leone terms, that's Tuco Ramirez sending an invitation to Blondie's funeral. Literally, every chart is telling you the sky's falling. There's the maximum surprise factor the moment anything good happens. Oh, and a deal with China? We heard rumors of peace from the White House, and the PRC suddenly threw the best part of the Yangtze River on anything positive. In that cesspool of negativity, a veritable Gowanus canal of pessimism, we got some good news from the most unlikely of places. Corporations. Earnings. Prepped by endless talk of recession, mostly from the pompous usual hedge fund managers, the bears who could care less about leading you astray. They don't care about you. You see, they've already made theirs. We figured that they said these companies would show us the true blood-drenched colors when they started reporting. No, actually, we've had the opposite, hence the bowling alley, the lucky strike, where the pins begin to fly. Consider just the guest on last night's show. The market's like Dante's Divine Comedy here. 9 circles of hell, the 9th and worst being where Satan, a.k.a. the enterprise software cohort, resides. The most dazed and confused ServiceNow, NOW. Previously one of the best performers out there. That is, until the last quarter, which brought actual guffaws from the bears and bulls alike. Then last night, ServiceNow reported a quarter that showed why you should never count out CEO Bill McDermott. This company picked up more major contracts in one quarter than most get in a year. It was a blockbuster. And do you know that that stock roared 15% today in response? Then there's Vertiv. At one point, Vertiv strode the earth, as you'd expect from a company that makes the guts of the data center. Then some Chinese outfit claims that they can build AI models using far less software, less hardware, and the whole data center complex collapses. Suddenly, Vertiv reminds us of something out of Jurassic Park. Until yesterday, when we learned that business accelerated quarter to quarter, something that was confirmed today by executives from both NVIDIA and, more important, Amazon. I'll go into more detail in the data center later. And by the way, tonight Alphabet also reaffirmed its spend. Vertiv closed below $72 on Tuesday. Now it's at 83 and change. Finally, pulling up the rear, we heard from GE Vernova, verifying the greatest story ever told. The reinvention of the national electric grid, something that could employ hundreds of thousands of people, veritable WPA worth of work roles. These guys make the best turbines in the world, and they make them right here in the United States. Of course, it wasn't just the quarters fleshed out in last night's show that spread the bullish gospel. The once and future analog semiconductor king Texas Instruments finally called the bottom in industrial semiconductors at the exact same time that Lam Research, the best semiconductor equipment maker, gave us a pristine upside surprise. The semis? Until last night, we preferred semis of the tractor-trailer variety because at least they didn't blow up every quarter. Hey, now they're back. Never forget that a real industrial and tech rally requires that safety be last. That safety, never known to take time off, actually goes on vacation. Today was that day. Procter & Gamble put up a series of sad numbers, frankly, more flaccid than a Tide Pod, with a stench that Febreze couldn't mask. PepsiCo, flat, with the existential threat of a Health and Human Services Secretary who appears to want to take the blue, the red, and the orange out of Gatorade, the yellow out of nacho cheese tortilla chips, and yes, the brown out of Pepsi-Cola itself. So you have the dangerous safety stocks pulling back and the most aggressive stocks in the room roaring. Can we draw some conclusions? Here's the bottom line. When the White House is dignified, or at least silent, at the same time that the PRC goes all WWE, while our Jimmy Stewart of the Fed chief gets back to being unsoiled, well, ladies and gentlemen, that's a bowler's bull market. Beware of flying pins, everybody, because the balls are rolling fast and furious, and I don't see anything that could be left standing. Charlie in California. Charlie.
Hey, Jim. So I've been looking into REITs again. Specifically Realty Income. Is it too early to start getting back into REITs?
No, absolutely not. I went over that quarter with a fine-tooth comb. I know the stock dropped down to the low 50s when they reported. I felt that there was an overreaction. I actually liked the quarter, and I am still a buyer. Don't forget, you get monthly dividend checks when you buy letter O, which is one of the reasons why I stand by it so much. Somehow the factors in the White House and the Fed and earnings season are aligned to create a bowler's bull market. Watch out. There are pins everywhere. On Mad Money tonight, where do natural gas players stand as the commodities price is down big? I'm checking in with EQT after its excellent report earlier this week. That is more power ahead for the AI infrastructure theme that I just talked about. I'm revealing the stocks I think could be standouts, so you'll get them and you'll write them down and you'll buy them. And then after the market's whipsaw reaction to Dover's guidance today, I'm breaking down the quarter with the industrial's top brass. Who knows? Seems cheap to me. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.